Welcome to the New York Outlook for Friday, the 15th of December 2023, starting off with the economic calendar. As you can see, in terms of the London session, we had PMI released. However, it was somewhat of a mixed result, and as a result, we couldn't conclude on how to treat any open positions or how to take new positions, as the objective or the idea would simply be, given the news release, to just trade what the technical analysis is telling you. I did manage to get into one position. However, in terms of managing that position, we will have to assess what the New York based news releases will tell us, and then based on that we'll manage the trade accordingly. Perhaps just to touch on the 4 hour, nothing has changed that much. We still have reason to both long and short in terms of the ERL continuation momentum scenario. However, in terms of actually entering, we need to be guided by either the 15 or 5 minute in order to make an informed decision. So jumping onto the 15 minute, what you can see is from the London session, I essentially had this order right here with the idea that this liquidity will be tapped into this verb level, which is supported by the worm. However, we did actually take the liquidity but didn't actually tap the entry level. We would have been break even, and then coming back up, this trade would have been a break even trade. However, if we were triggered, we wouldn't have considered any other positions. Well, not at least until we actually broke this. So that trade was then sort of let go, and then we reassessed the situation, right? So in terms of whether longs or shorts made sense, what we can see is the ERL reversal primary leg remains valid, simply for the fact that we didn't actually tap pro trend leg support OB. As you can see, it doesn't quite tap here, and neither is it reacting to anything on the 5 minute or a worm for that matter. So for that reason, we didn't actually have reason to validate a pro trend leg right here. Sorry, a primary leg, a pro trend primary leg from the reaction of this, which then essentially means that the ERL reversal primary leg is still at play, and thus short opportunities remain valid for the day. What we can do is then extend the fib level, which then gives us this entry, and my entry was right here. And I decided that given that we can essentially, or have reason to trade both directions, and the difference between a stop loss right here and one here isn't that large, especially with a news release, it just made a lot more sense to actually cover the previous high of the day. Remember, in terms of shorting, we can short because we are within or below the previous high of today. However, given the circumstances and the fact that we are daily candle backed in terms of shorts, we can actually short from above the previous high of today. So currently you'd probably be in one of two positions. Either you caught the entry right here, in which case you'd be break even and you wouldn't have taken another entry, just because of the fact that if price was going to run, it would have ran from here. If you weren't in an entry, you would have taken this entry based on the fact that there's new liquidity in the leg and there isn't really reason to support this as a new primary leg. Essentially this trade is running roughly half an hour, and depending on the news release, half an hour into the New York Open, you'd either be happy to keep this position open, or you'll try and close it out with some profits, or at least at a minimum break even. If you're in a loss position at the time of the news release and it's against you, you'd set your TP to take you out break even with commissions ideally, or you'll take a loss. And then in terms of actually taking longs, what we would need is either for price to come into here and then to validate a long position, or alternatively we'd extend the pro trend leg to the upside. And yeah, I guess what I'm trying to say is, if we do make a new low of the day and then have support longs, we'd be able to trade that based on the 5 minute, provided that it actually does align with the news release and is supported. The news release has to be conclusively supporting a 5 minute long based New York high low of the day trade, because that's essentially what we'd be looking for, right? If price needs to come in here, it would likely occur during New York. In general, we don't trade based on New York based high of the days or low of the days, unless it is supported by the New York session. But yeah, that's essentially my outlook for the New York session. I hope you managed any open positions well. If you are in this trade, manage it carefully, pay attention to the news release, and ensure you take the best course of action. Oh, the other thing I did want to mention is the fact that if USD news is negative, and we do indeed make a new, if it's negative, if it's positive for the USD and we make a New York high of the day, then in terms of the 5 minute, we also have reason to trade a 5 minute based New York high of the day short, because it is ultimately supported by the 4 hour narrative. So there are a couple of scenarios you need to take into account, but overall it's slightly complex, but not as crazy as it's been the past day or two. So yeah, trade safely, and we'll chat again for the end of day review.